Hello friends, Stacy Anfinson here with your TAR Report Market Update. Today we're doing this September 20th of 2023. Interesting topic we're going to handle today. It's single family housing. We're going to look at rent versus ownership metrics. For those of us that have been in the business, we've always been advocates for buying housing and not renting it. So the question we're going to try and handle here is, why is there demand for build-to-rent housing when there's an undersupply of for-sale housing? So that's a kind of a head scratcher for us. So let's look at some of the numbers here and see if we can figure out why. Going back to the third quarter of 2013 and going through each of the third quarters all the way up to the third quarter of this year, looking at the median monthly rent for attached housing. Now, the reason I'm doing attached housing and not detached housing is attached housing is a bit more homogeneous than detached housing. You've got a lot of different variances in square footage and garage amenities and all that stuff with detached housing. Attached housing, in my opinion, is a little bit easier to make an apples to apples comparison. So if you go back to compare the third quarter of 2023, third quarter of 2013, the median monthly increase or the median monthly rent has increased 81%. Now let's take a look at the median sales price for attached resale housing. $350 so far during the third quarter of 2013. This is not a typo. Third quarter of 2013, it was $148.5. It's a 135% increase compared to third quarter of 2013. And I guess one of the things that bugs us, and this is wealth creation, right? If you're renting a house between the third quarter of 2013 and the third quarter of 23, you got none of this appreciation. Yet if you owned attached housing, you'd be up 135%. So ownership of single-family housing, in my opinion, is the greatest wealth creator in the history of this country. So we should continue to be advocates for it. Now here's the culprit, as usual, a national average 30-year fixed mortgage rate. Once again, we're comparing third quarters going back to 2013, third quarter of this year. You can see coming out of COVID, we dropped down between 289 and 29. That was the bottom. But look at the big increase between the third quarter of 2021 and the third quarter of this year. 2x increase in terms of that. Well, guess what? That's had a huge increase or impact on the monthly principal and interest payment. For the third quarter of this year, it's $23.52. For the third quarter of 2013, it's $7.51. So it's a 213% increase compared to that. That's a big, big increase. So let's look at the graph here, because I think you're going to see an inflection point here, which is kind of going to lead us to the answer as to why there's this demand for either build-to-rent housing or Wall Street money acquiring housing to rent it out. The top bubble here, which is this blue line, you can see this is where the inventory trends turn. This is the third quarter 2021, and it goes on to the downward trend where it is right now. If you look at the bottom bubble here, this is the other inflection point. This is the first time in the third quarter of 2022 where monthly principal and interest has surpassed the median monthly rent. So you can see that this line is now ahead of this line. And it's really the first time in the history going back where this blue line has been ahead of this blue line. So what do we have going on right now? This is a table of rental home gross yields compiled by three different sources. This line right here is the one-year Treasury note, which is essentially risk-free. In our market, we're a little bit below that. So this is going to indicate that yields are going down. Therefore, the demand for such housing should be going down as well. And we'll talk about that in the next couple of slides. Now this is major landlord annual purchases. This is from John Burton's Research and Consulting. And you can see in 2021 and 2022 through the roof, there's just this great demand. And remember what interest rates were back then. So this was in essence a yield chase, right? If you're getting 1 or 2% on your money, that's not going to cut it in investment world. So they looked at the single family to rent market and saw fantastic yields out there. And so they really amped up the purchases. But as interest rates have gone up, their purchase levels have gone down. Let's drill this down to Wake County now. This kind of mimics what you've seen. This is the per month average of investor purchases in Wake County going back to 2019 or 22, 23. Boom, 2021, 95, 2022, 42, and so far this year, 35. So that they're mimicking the trends in Wake County that we've seen nationally in terms of investor purchases. All right, let's wrap it up. Just the economic facts landlord. Third quarter of 2021 began a downward trend in attached housing added to the market. Third quarter of 2022 is the first quarter where monthly PI on mortgage detached surpassed median monthly rent. It's an inflection point. Bullet number 3, lower yields and difficulty in finding houses to purchase. So they struggle just as potential buyers do in terms of finding houses to purchase. So it's led to a drop in per month investor purchases, both nationally and in Wake County. And the last thing we'll talk about is build to rent is the easiest way to acquire rental inventory. So you see a lot of the national builders here starting out with subdivisions that they're going to offer on a for sale basis, and a big pile of money comes along and says we want to buy it all, and they do it. So far this year, about 8% of year-to-date new home sales in Wake County were built to rent. That's the same percentage observed in 2022. So that is all we've got for this time. Appreciate you listening. Hopefully you learned something. I always do when I do this. That's kind of the reason that I do them. Anyway, here's my contact information. Certainly would like you to hit like on this for further information. www.tarreport.com. Also, a shout out for those of you that have appraisal needs for either investment properties or estate or divorced. We're certainly able to handle those things for you, and I can be reached at this email address. So thanks again. We'll see you later.